Bringing in Mayuresh Joshi of William O'Neill India, who's joining us on the show as well. Mayuresh, two big numbers coming out, three big numbers, if you include HCL Tech as well, coming out tomorrow. Anything that you feel is going to do, probably surprise the street?
So I think all three numbers are going to be critical, right? What TCS exhibited last quarter was definitely disappointing. So I think the large expectations is around the $1.5, $1.6 revenue growth quarter on quarter, around the 1% similar to what Infi delivered in constant currency terms. But I think the commentary is probably something that will do the trick for TCS. They did win $6.4 billion in terms of deal wins last quarter round. The expectations largely is that EBIT margins should probably improve from 24% to 24.5, 24.6 within that range itself. But again, what they probably tell in terms of the retail outlook, because retail was surprisingly slow across geographies. So any uptick or any improvement on the dynamics of the retail vertical itself is going to be very, very critical for the overall performance, because BFSI generally is expected to be very, very weak. So I think one should go with the numbers, not preempt on how the stock might react before that. So I think if the numbers are in line with estimates, the stock might just have a subdued move unless the commentary is very, very good. For HCL Tech, similar to what Infi delivered, I think the organic growth is expected to be on the higher side, which typically means that the kind of dynamics that the stock might exhibit, specifically to its key verticals, and mode 2, mode 3 is going to be extremely critical from an earnings perspective for HCL Tech as well. Valuations obviously are far cheaper than the top tier names compared to a TCS or an Infosys. So I think HCL Tech probably, if they're able to up their guidance, which I think on the organic front they would, and maintain their EBIT margin guidance as well, I think valuations probably look far more attractive. The third number obviously is Reliance, right? And I think a large expectation thereof is that the petchem is probably going to disappoint. And the naphtha spreads, the integrated PET spreads have cracked. So the cracks that we normally talk about have actually cracked big time, which basically means that both the product prices on the realization front on the petchem side and the petchem margins and EBITDA would be significantly lower on a YOY basis. Refining margins have come off significantly. So I think Singapore GRMs at 1.6, 1.7. Though the outperformance will be very, very stark, I think it's up to the telecom and the retail vertical to probably put up a good show, which they would, right? So ARPUs for Reliance at 120 odd rupees in the quarter gone by, with the tariff increases they've done, interconnect charges, so on and so forth. It should be within that range of 124, 126, and retail should probably show 10 to 12% growth. So I think telecom, retail holding up for Reliance, but petchem disappointing, and the street has factored that in. How the GRMs improve is something to be seen, because the new IMO regulations kick in. So I think that should probably start providing some support for the GRMs for Reliance going forward, even if the Singapore GRMs are low. So I think weak numbers are priced in for Reliance, but let's see how it goes as well.
By the way, there's some announcements. So I think Granules, and I think we marked that, but just want to show the surge in the stock as well. There's a board meet on Jan 21st to consider the share buyback, and that stock is up about 4.5%. So and good volumes, by the way, today. And a lot of these volumes have not necessarily only happened in the last 1 minute. There's been a fairly decent volume movement throughout the trading day today. So do watch out. Fundamentally, do you track Granules as a company? There are some individual pharma names which are springing up a surprise or two, Mayuresh. Any thoughts on Granules?
No, not specifically Granules, but I think we spoke about last time about Alkem Labs, right?
Yes.
So I think though valuations might look a little bit on the higher side for Alkem, I think the product suite that Alkem has, both domestically and on the export market as well, I think a few key products within the US markets itself were supposed to have strict competition. But largely, I think that has not played out. So I think there is expectation of a 5 to 6% quarter-on-quarter US revenue growth. US revenues landing anywhere between 80, 81 million odd dollars. They still account for 30, 33 odd percent overall exports for Alkem. So even if I assume a figure of almost 100 odd rupees in terms of EPS, yes, the valuations are on the higher side on an FY21 basis as well at the CMP. But I think the Indian business holding out, expecting the US business to probably hold out with new launches. I think there should be a reasonable move that at least I foresee for Alkem from an earnings perspective.
You know, that one disappointment, and maybe I'll get in Rahul's view there too, but first the fundamental view, Mayuresh. I mean, about time that if you have Sterlite Tech in your portfolio, you switch it with some other stock. I mean, it continues to come out with a disappointing quarter every second time. And while you can play the hope trade, The numbers are just not there.
Oh yes, and I think I always believe that let the numbers come through, right? Not just for Sterlite Tech, obviously they've been disappointing, but for stocks within this category itself, I think if the numbers are not coming through, wait for that numbers to start emanating. And even if you miss that 10, 15, 20% kind of a rally, and it's okay because you've got the number justification behind you. Now, it's all in hindsight that once 5G starts, the capex goes on, and they've got a beautiful presentation slide where they've given that the 3G spends that actually tripled from 2005 to 2011. The 4G spend had gone 2.5 times from 11 to 18. Yeah, I think 5G spends will also start picking up steam. But I think the underutilization of their capacities, the OFC capacity, the depreciation that they're probably incurring in that, so the fixed cost absorption not coming through, the services revenues, which is almost 50% is a low margin business, which basically means that as the leverage starts coming down in terms of the operating performance, the operating leverage, I think the return ratios exhibit the same. So ROEs are expected to dwindle downwards as well. Yeah, so I think it's better looking at high growth, higher companies at this point of time. Or companies where the leadership is there. So I think the margin of safety, I think with sticking with leaders at this point of time, the momentum is very strong, at least might protect your money to a certain bit. But going for hope trades, I think you better wait out till numbers starts coming out on a more granular basis.
Okay, so those are some closing strategies coming from our technical experts. And by the way, the volume on MRPL, there was just a bulk deal which took place a while back. Almost 30 lakh shares were added there. But Mayuresh, I want to talk to you about the fertilizer stock. Now, yesterday there was a report indicating that Finance Ministry could be looking at decontrolling urea prices. Not sure if that's going to happen. No confirmation. Of course, we'll have to wait for the budget. But if something like that comes up, how do you see the reaction on these stocks?
Something like that does come up. I think stocks like RCF, Chambal should react very, very positively, right? Because I think
how does that change the dynamics of the sector?
So I think the kind of imports that we're still doing in terms of pure urea imports, I think they're still quite significant. So I think on two counts. One, I think the pricing related issues, and second, I think the exchequer hit in terms of the import value of urea actually coming in. So I think both these aspects can be taken care of if something like this goes about. But you first have to probably ensure that the subsidies that are still to be paid out actually get paid out first, right? So I think the decontrol probably comes as a second part or corollary to all these aspects. So yeah, I think if something like that does come out, as I said, I think there will be a sentimental interest in RCF, Chambal. I think fundamentally, I think we discussed a stock last week. Coromandel is still something that we continue like.
But a big fillip, I mean, from 242 rupees per 40 kg bag to 400 rupees per 40 kg bag. That's, but nonetheless, in June itself, it was shot down.
Yeah.
So I don't know what's changed materially since then for this to once again start to become important. Anything else from your stable?
Yeah, so I think city gas distribution companies are in flavor, right? So I think we like something like a GSPL. So I think not directly linked to the gas distribution play, but it's got a 55% stake in Gujarat Gas. Again, the transmission volumes, in our opinion, should hold out for this quarter very, very strongly. So 38, 39 MMMST is something that we probably forecast for GSPL to probably do in this quarter. And again, I think the pure valuations that it probably trades at on a standalone business, and even if I have a discount to the Gujarat Gas stake, even from the current CMP, I think there is significant value accretion that GSPL can derive. So I think GSPL is something that becomes a play both on the transmission as well as an indirect play on the gas distribution business.
So you not play GAIL then?
I think there's a lot of overhang, right? For GAIL.
You're waiting for the AGM.
So the AQR is one aspect of it. The gas trading business is the only vertical which will do well because I think the price rises that we've seen is the only business which will get impacted positively along with the gas transmission one. The LPG business is going to get hit. The petchem business has obviously taken a huge hit. So I think the losses might very well continue. So I think the ROE drag might very well continue even for the better part of the first half of the next financial year. So I think dividend yield of 5.5 is all good, but from a pure earnings perspective, I think there's still time.
Okay. Mayuresh, take a moment to thank you for joining
Thank you
in
so
today.
much.
Appreciate your time.